Hi traders, welcome back to the Village Trader Charts with me, your host Njabulon Tabande, host of the Village Trader Podcast, the podcast I host trading with other traders, trying to learn from them. Find the link to that top of the description below. Today we're not going to be looking at some charts. We're going to be, I'm going to be just chatting to you around growing and my experience trading a small account, because I know a bunch of you guys are trading small accounts, and certainly myself as well. I'm trading a relatively small account. So yeah, I'm going to be chatting about that today. But before we get into that, please do make sure that you subscribe to the channel if you're new. Hit that all important bell notification button so that you don't miss any of these videos. And yeah, man, do like the video to support the channels and help us with a little bit of the algorithms there. So yeah, let's get straight into today's topic, which is growing a small account or working with a small account. Um, it's it's gonna take time. That's the first thing I'm gonna say. It will take time to grow a small account to grow, and by small I mean anything from 1,000 rand to about 20 to 50,000 rand. That is a relatively small account. In fact, anything from 1,000 to 100, that in my book is a small account. It's gonna take time to grow it, and let's discuss how the account size changes or grows or decreases as the case may be. You either funding the account by adding more money into it, you're either making some profits or you're making some losses, or you're taking some money out of the account. So, or getting some dividends and swaps and that sort of thing, but those are minuscule compared to the three I just mentioned. So yeah, those are the three main ways of change making a meaningful impact into the account balance or rather what you see on the account balance line on your brokers. So those are one of the three things. So how do you turn a small account into a sizable account? I know it's gonna sound counterintuitive, and it won't make sense much in a way, but forget the money. Focus on trading right. Forget the money. Money will follow you almost as an afterthought. If you're trading right, money will follow you. So, for example, you know, just make sure of the basics. Cut your losers short. Easy thing to say, difficult to do. Um, don't let any one trade blow you out. Again, easy to do. Easy to say, hard to implement, because tripling your risk means tripling your returns. But then don't be overly optimistic, thinking that or believing that you know what's going to happen to the market and therefore you don't have a risk. You always carry a risk, because we do not have any influence or power unless you one of those guys that actually have the capital to move the market. But trading a small account, that's not the case. So remove the money. Just focus on trading right. Get the right signals. Execute the right way. Positioning size. Keep the positioning size small. Risk a small portion of your portfolio. Don't blow out. So your job as a trader is to make the equity line go from bottom left to top right. And one of the first things that you need to do is to protect it from going from top left to bottom right. You know? So you want that equity curve to be going this way and not that way. So you need to first stop it from going that way, and then eventually you'll get it to go that way. So cut your losers short, let your winners run. Again, very very difficult to say. Very very difficult to do. Easy to say, but yeah, focus on trading right. Forget the money. Just forget the money for a while. For at least 10 years, forget the money. Put in your 10,000 hours, and as you doing the right things, compound that return by then adding more money to the right thing. Don't blow your account and then refund and then blow and then do the same thing, and then add more money into something that's working. So if you happen to do blow your account, go back, do your homework, see where you went wrong, which is most likely, you've been adding to losing trades, or whenever you were wrong bigger than you were when you're right. You win, your risk reward ratio is all over the place. Go back, do that homework, fund the account again, give it another go. But each and every time, come back smarter, come back with more discipline. But be, um, again, man, I emphasize trade right. I'll touch on a perfect trade towards the end of the. I'll get to a perfect trade. Don't worry about. I'll get to a perfect trade. And man, be patient. Be patient not only with yourself but with the process. Be patient. It will take time. It will take time. As for example, I am a trend follower, which does mean because markets spend more time in sideways than they are trending. I take a heavy drawdown over or you know from time to time I take some heavy drawdown because the market is just not going anywhere. However, whenever I'm wrong, I want to be wrong small. But when the market does start to trend, whether trending on one particular stock or the overall market is trending, I want to be big. I want to be adding to my winners. So that's my personal definition of trading right. Cutting my losers short, letting my winners run, and adding to my winners to compound that return. And once you got that right, you can then add more money into the account. One, to reduce. So when you add more money, it reduces the current risks, the current risk on the trade that you have open. But yeah, man, add more money to the right thing. But key. I come back to the point of trade right, trade with discipline, trade well with that small account. And yeah, man, be patient with yourself. Focus more on returns and losses as percentages, not in rent terms, right? Because if you make, say, I don't know, 100 rand on a trade, on a 1,000 rand portfolio, you've made 10% on that single trade. You may feel like $100 isn't much, but relative to the portfolio, it's a heck of a lot. So look at your returns and drawdowns in percentage terms, especially in the beginning, rather than in absolute terms. So yeah, do that. Um, Fish for brokers that suit your account size. So it makes no sense for you to trade with a broker that charges minimums. That will charge you a minimum to go in, charge you a minimum of 100 rand to go in, 100 rand to go out. That's already, if you're trading with 1,000 rand, that's already 20%. So you need to make 20% on the trade just to break even. So you're not gonna fare well with a broker that charges minimum. Look for a broker that doesn't charge minimums. Look for a broker with low commissions, preferably zero, but low is okay, but zero is better. I'll give a couple that I know of that don't charge commissions, and trade. I'll trade anything that moves, but I'll preferably, I would say, trade indices, because solely because they're not as volatile. Um, then your account won't experience too much drawdown as a result. And then as you learn the emotional discipline of trading, you can then add stocks, add forex, and because typically we all start into the forex market, and by jumping into that market, you're just trading against the best of the best, because the big banks, JP Morgan, Citi, whatever, the big banks will put their best traders where the most money is, which is the forex market. So rather start, indices, come back into equities maybe, and then maybe later look into the forex market. But if the forex market works well for you, man, if it moves, trade it. Trade your portfolio with discipline. By discipline, I mean discipline to the system that you're trading, discipline to the risk management and money management side of things, and discipline to trade, monitoring the trade side of things, and your psyche and your emotions and that sort of thing. But most importantly, man, manage your risks very, very well. Like, no single trade should take out more than 5% of your portfolio or 5% of your balance. No single trade should do that to your account, you know? So try by all means that you in trading for a living, Dr. Alexander says one of the key things a trader needs to decide is they need to decide if they're in this for a long haul, because trading is is a very tough endeavor that you can ever try to be successful at. So decide that you're in the long haul, and by long haul I mean 10 years, 20 years, 30 years. You know what I mean? So, and over those years, your personal financial situation will change and will be able to add into the account. Don't put scared money into the market just because you want to compound the returns. Scared money doesn't win, because scared money comes with a lot of emotions. So you're gonna lose money, trading scared money. And don't quit your day job just yet, man. Don't quit your day job and think you're gonna day trade. Keep your job, and perhaps try and swing trade end of day data, so that you don't clash with your employment. Your employment will give you the capital to keep funding your account. At least that's how I'm dealing with it. I'm an end of day trader. By data, I'm a software developer. My trading and my work never clashes in that regard. So keep a day job. Trade with discipline. I know you can triple your returns by tripling your risk, but it's not worth your while. Maintain that money management and that risk per trade. Make sure that you don't lose an inordinate amount of money, and make sure that your average wins are bigger than your average losses. Yeah, man, and have trading goals. Have trading goals that have nothing to do with your P&L. Have trading goals of doing the right thing each and every time with precision. Whether you experiencing losses in a row, or an extended run of losing trades or not, try and execute your system as per the plan each and every time. We talk about the concept of the perfect trade. I'll do a video on, specifically on the perfect trade and my particular checklist of the perfect trade, perhaps next week next week on one of these videos. Yeah, man. So in order for, key takeaways, trade with discipline. Forget the money. Just trade right. Trade with discipline. Find a broker with no minimum charges for a transaction. Find a broker with zero or low commissions, preferably zero. And start with indices or trade liquid stocks, man, so that that volatility doesn't kill you as much as it does on those illiquid stocks, because they so illiquid. It's easy for anyone to move them one direction or the other. And most importantly, trade with discipline and exercise some good risk management. So we'll park it here for today. Thank you for watching till the end. Be sure to subscribe if you're new. Hit the bell notification button. Join us again on Monday, and on Wednesday we do a live webinar. Links to those in the description below. Before I forget, one of the brokers that don't charge minimums, Think Markets. I have the link to that in the description below. Use my affiliate code. Link to that in the description below. Yeah, man, that's it for today. Thank you for chilling with me on The Village Trader. Check you next time on The Village Trader. Cheers.